Welcome back. Let's have a quick look at what's happening to international markets at the moment. US markets, of course, are open today after yesterday's public holiday, and they opened slightly shaky. The S&P down 1/5%, the Nasdaq off 0.5%, and the Dow Jones also 0.2% in the red. The dollar was a bit weaker today. Donald Trump's comments that he doesn't like to see such a strong dollar, it's killing them, obviously had an impact on the market. And across the Atlantic, we've had the FTSE 100 pulling back 1.5%, the CAC giving up 0.5%, just about, the DAX down 0.1%. And still with me in studio are Rowan Williams from Nitrogen Fund Managers and Gabran Smith from NEFG Fund Managers. There was a question that came through, or an email rather, from Gareth earlier on, and he said, I carried out a quick survey on the internet print media to find out which were the most popular stock picks for 2017 as recommended by the investment community. From the chart below, the 6 most popular shares were as follows: Woolworths, Aspen, Steinhoff, Consolidated Infrastructure, Naspers, and Pioneer Foods. This looks like a good balance of shares to have in a portfolio, and beyond, I'd appreciate comments from the panel.
Yeah,
would you agree with
that? Not too bad.
No, I think what you're seeing is a balance between domestic stocks and some rand hedge, Steinhoff versus Woolies, for example. So I guess, a big call on markets, particularly last year, besides sort of resources and banks, was also currency. So and pound in particular, and rand. So I think implicit in a stock pick is a view on a currency. So it's something to consider, but this kind of hedges you a bit because you've got a balance, and I think overall quality companies.
Yeah. In fact, we were saying last night that maybe last year was also the death of the forecaster. So, the forecasts were just thrown out of the window last year. So, would you make any assumptions on currencies when you're picking your shares this year?
Yeah, we have to. We made the assumption last year at the beginning that the currency is going to strengthen just because it was like 4 standard deviations away from your purchasing or your PPP, which we think is okay indication. It always overshoot to the top and to the bottom on it. It should be around 12, so it will probably undershoot on the bottom again. If you look at, is the dollar so strong, isn't maybe the euro weak because you don't know if the European Union is going to last and Brexit is gone and the yen is manipulated and QE is still spent there. The currencies on the emerging side has actually been very strong over the last 12 to 13 months, and we think that's going to continue for this year. Okay. So certainly you need to look at that, and where the market is 80% rand hedge, you probably want a more portfolio. If you're a benchmark, I'll go more maybe 50-50. And more some SA Inc. stocks in there than what you usually would have for the next year. But that's our view, and I think you certainly need a view on the currency, although nobody's going to get it right if you want to make stock picks for the year.
Okay. Moving on to some other picks, Dis-Chem, although in its infancy, I have a feeling that Dis-Chem will grow considerably this year. What do you think?
Look, it was very exciting in terms of the IPO and the success of the IPO, and I guess it is a business with very strong sort of secular growth underpin in terms of that segment, and it's a very strong offering, and it has potential for sort of big box growth in terms of number of stores. I think strong operators. The valuation, though, is reflecting, I think, most of those attributes. So it's quite difficult at these levels to get very excited. It has to deliver growth, I think, to justify the current share price.
So do you think it could just end up being sort of stuck where it is for a while to come?
I mean, fundamentally, sort of, we see it sort of as fully valued, but that doesn't mean if it doesn't deliver, people continue to get excited and sort of keep the sort of share price going at a very high valuation. But yeah, you're very much banking on growth for the continued share price growth.
Yeah. Gabran, any thoughts?
Yeah, same view. I mean, they want to double stores, I think, next 5 years, etc. I think most of those news, or at least 3 or 4 years of the good news, is priced into the share price at the moment. We don't like shares owning them at 30 P's. So we won't buy those shares at the moment.
So would that include
we think there's much better opportunities in the local market. It's maybe not on the other side, but also in retail.
Yeah.
What about Hulamin? And I'll ask you first, Gabran, because you have been a fan of Hulamin for quite a while. I don't know if you still are, if you've been disappointed.
We still hold. We haven't sold. We're not going to sell at those valuations at the moment. Look, on a price to book, it's still ridiculously cheap. Currency is probably playing against it at the moment. They've done a lot of things as business right over the last year, 18 months. So we still think it's one of the cheaper assets out there. But it's also it's manufacturing in South Africa is a difficult game. We still hold it. We think it's one of the cheapest shares on the local market. Most of the other shares that fell into that bracket of very deep value orientation has re-rated over the last year. So not many shares in that bracket anymore to hold. Maybe it will re-rate this year.
Rowan, do you have any thoughts on Hulamin?
No, it's not something we follow closely, but I mean these sort of deep sort of manufacturing businesses we sort of see as difficult. Sort of the environment's not very conducive. Sort of end demand is not good with low GDP growth. So cyclical potential opportunities, but it's not something that we sort of get very excited about.
Okay. What about, okay, there's, Ian says he's picked, he says, I would appreciate a 6 to 12 months view on the following stocks: TISO Blackstar, Advanced Health, and Quantum Foods Holdings.
Small caps.
Sure, yeah. Okay, TISO, the holding company of BusinessDay, they are fixing the portfolio in terms of making it much simpler. So selling the TISO element to it and really focusing on the media assets. So that's real deep value. I think it trades at around a 45% discount to NAV. It's doing share buybacks, which is NAV accretive all the time. So they need to sort of reimagine the business, obviously go through this restructuring, but also improve the stock liquidity. So again, it might be something for the private investor. From a fund management point of view, very difficult to hold.
Enough.
Yeah.
And Advanced Health and Quantum Foods?
Look, Advanced Health is a long-term story. So it's trading currently at P's that doesn't make sense because they're still investing and opening up almost double the capacity that they had in the next year or two. Those things take time to fill up the hospitals, etc. So if you're a long-term holder, the guy did Afrox Health and he started Life Healthcare, etc. He started this company. I think there's still a market for that. Although I see Mediclinic, Netcare, and these guys are starting day hospitals as well within their hospitals. So they've seen the threat. It's a bit of a concern there. Also, lots of good news priced into that stock. That stock started at R1, it went up to R2.50. It's down at 150, 155. So if you're a long-term believer, you're probably going to make lots of money out of it. We think it's a bit pricey, and we still want to see some growth first from the company going forward next year or two.
Yeah, because there's no real evidence yet that things are starting to happen for them. And I mean, you talk about long-term, and I sort of wonder if things have been pushed out even longer term.
I like to see the next 6 months, 12 months, first statements before I make a decision on that one. What was your other Quantum Foods?
Quantum
like
Foods,
the chicken
so
guys.
chicken, well, more eggs, more eggs and broiler chicken.
Yeah, I mean, I've looked at it. It's quite a neat small cap. I quite like management. They're very down to earth and really focus on their business. It is part of the Zeta Stadel, some of the shares there. So it's been obviously part of the whole chicken cycle and egg cycle to some extent. So very high input costs and rising input costs, with weak pricing power. So if you believe in a cyclical recovery in the poultry stocks, because we're going to have a very strong maize crop and lower maize prices, lower input costs, better demand fundamentals, maybe some tariffs on the chicken side, you could see quite a strong bounce in terms of performance and stock price.
I mean, if there's a surprise on the maize crop, that's not reflected in the Quantum Food share price at the moment. So a surprise being a positive surprise. Do you think there could be quite a... You
saw Astral actually running up quite handsomely over the last 6 months with the drought disappearing somewhat in some areas in South Africa, etc. So that's the bigger quality guy, and they do about a 50% feed as well from revenue and from earnings front. So we like that from a diversification point of view, because it's just the chicken business alone is very cyclical. So that would be our preference. But I mean, if you look at some of the other guys, the RCL, the Rainbow Foods, etc., those guys are also still in the stress levels where they haven't picked up. So maybe the big guys picked up yet, but the smaller eggs are still there down in the doldrums, and they first want to see the earnings coming through.
Yeah. There's a question asking us to discuss the healthcare sector, but unfortunately I've run out of time, so I will put that to guests tomorrow evening. So getting to your 2017 stock picks, Rowan, you said it's kind of a reasonable pick, so it's not like a widow and orphan kind of stock that might shoot the lights out or might collapse in a heap. and it's Woolworths.
Yeah,
but that is sort of a slightly risky pick at this point if you look at what's happening out there.
Yeah, well, I guess in terms of the stock price performance over the last 12 months has been very disappointing. So I think, people have loved Woolies. They're obviously often customers of the business, and it has delivered in terms of earnings growth. It has had a wobble. I guess we're seeing sort of somewhat of a decline across the board in the retail volumes. Woolworths was considered quite defensive. I think it's got a little bit more cyclical in terms of the food offering. The clothes, which sort of was somewhat defensive, there's a lot more competition, a lot more choice, and obviously they have a big exposure to the Australian retail sector as well. So quite a lot of noise in the short term, but really, if we look through that, it's derated significantly. It is on around a 14 forward PE. You've still got that quality food business, which does remain defensive, is still growing, is maybe a little bit cyclical, but I think we are moving out of a negative cycle, so it is positively geared to that. And really simply you're getting a quality business that, and particularly the food business, on a clothing type retailer valuation, and I think they will ultimately deliver in Australia, and the business will de-gear and the earnings will come through and the stock will re-rate.
Okay, well, let's hope so. And Gerbrand, you're going a slightly wild card pick this for 2017, and that's Implats.
Yeah, well, you're looking, if you pick one of these, for some massive upside for the year. You don't want to be in the middle of the pack on these. So last year, I think we picked Anglo, we did okay. Impala, we just think is still, from all the platinum plays, are probably the cheapest on a price to book, and we think that's the right way of looking at these guys, of cyclical companies. They still trade at a massive discount, about a third to what Anglo Plats is trading, etc. We think they got decent projects coming online with Shaft 17, etc. If you read the latest annual financial statements, they're very positive on most of the happenings at Impala. It's actually the lacquer one to read at the moment. Between all the
you never thought
guys.
You'd be saying that
yeah,
about
you actually got
well.
excited, but the share price pulled back because somehow platinum was in a deficit over last year. It's going to continue to be in a deficit for the foreseeable future because nobody has produced more platinum in the last 10 years. It's just been tailing downwards all the time. And somehow the platinum price hasn't gone up. So we believe this year might be the difference, and we think it will go up. And that should bode well for Impala at a 48 or 49 Rand share price, and we're probably looking at an 80 Rand share price valuation on it.
Well, if it does hit it, you might be in the running for the bottle of champagne or whatever it is that we decide to give at the end of the year. Gerbrand Rowan, thanks very much for joining us this evening. Rowan Williams is from Nitrogen Fund Managers, and Gerbrand Smit is from NEFG Fund Managers. Thanks for watching and for your questions, and we'll be back tomorrow night at 7:30.